In episode 8, we try to fix a failing strategy by making it faster. 20 and 50 SMA instead of 50 and 200. 970 trades, 39.6% win rate, minus $688. 16 times worse than before. But Claude told us something important at the end of that episode. The problem was never the SMA settings, it was the time frame. Both SMA variants are net losers on 15 minutes time frame over 3 years. The 15 minutes time frame is genuinely too noisy for a trend following crossover approach. There is no SMA length that cleanly captures trend on the time frame. That line changed everything. We hadn't been testing the wrong settings. We'd been testing on the wrong time frame entirely. So we made one change. Same strategy, same RSI filter, same everything. Just move from the 15 minutes chart to the 1 hour chart. Here's why this matters. On 15 minutes time frame, the 50 period SMA looks back roughly 12 hours of data. On 1 hour time frame, the same 50 period SMA looks back 50 hours. That's almost a full trading week. The signals fire less frequently, but when they fire, they're based on a much more meaningful window of price history. Less noise, more signal. While this runs, let me show you what 3 years of 1 hour data actually looks like on EURUSD. This is the same 3-year window we have been testing, May 2023 to today. But instead of 74,000 50 minutes bars, we are now working with roughly 18,000 1 hour bars. Each candle represents 1 hour of price action. The noise that was destroying our 15-minute strategy, the constant whipsawing, the false crossover, is filtered out naturally by the longer time frame. And here are the results. Let me walk through what changed. 15 minutes time frame, 50 by 200, our episode 7 result. Minus $43, 235 trades, 43.4% win rate. And 50 minutes time frame, 20 by 50, our episode 8 attempt, minus $689, 970 trades, 39.6% win rate. 1 hour time frame, 50 by 200, the time frame change. 55 trades over 3 years, win rate 43.6%, total profit plus 458.50. That's the first genuinely profitable result over 3 years. Let me say that again. The first strategy, what actually makes money over a full 3-year window, not a lucky 6-month window, 3 years. And here's what it's looked like. Look at what happens here, March 2025. The equity curve has been choppy, moving in and out of the profit zone for almost 2 years. Then something changes. The line starts moving consistently upward. By June 2025, the account is at $11,250. That's a 12.5% peak return. It pulls back, but crucially, it stays above the starting balance for most of the second half of the 3-year window. This is what a strategy with genuine edge look like. Not a straight line up, but a consistent bias towards profit over a long enough sample. And here's the comparison that tells the whole story. The red dotted line, 15 minutes time frame, 50 by 200, hence below the starting balance. The orange dotted line, 50 minutes time frame, 20 by 50, ends even lower. The green line, 1 hour time frame, 50 by 200, ends at 10,458, above where we started. Same strategy, different time frame, completely different result. Look at the individual trade bars. The winning trades are noticeably taller than the losing ones. Average win $141, average loss $94. That's a 1.5 to 1 ratio. For every dollar lost, the strategy recovers $1.5. And with only 55 trades over 3 years, roughly 1.5 trades per month, each one is a deliberate high conviction signal, not noise. Claude's verdict was clear. 1 hour 50 by 200 is first variant to be genuinely profitable over 3 years, plus $458, 4.6% return, 8.5% max drawdown, 55 trades. Why 1 hour works where 15 minutes doesn't? The 50 period SMA on 1 hour covers roughly 2 trading days. The 200 period covers 8 days. Those are the meaningful trend windows. On 50 minutes, the same period covered hours, too short to distinguish trend from noise. If you have been following from episode 1, this is the moment the series have been building toward. The first strategy that actually works over a meaningful time window. Hit subscribe if you want to see where this goes next. But Claude also flagged something important: 8.5% max drawdown. That's close to the 10% limit for most prop firm challenges, and only 1.5 trades per month. Most prop firms require a minimum number of active trading days. This strategy works, but it's not prop firm ready yet. That's episode 10. Code push to GitHub as always. All three variants are there: 50 minutes 50 by 200, 15 minutes 20 by 50, and 1 hour 50 by 200. You can run them yourself and verify the results. That's episode 9. 7 episodes of building, testing, and failing. And now, the first strategy that genuinely works over 3 years of real data. The time frame was the problem all along. But we are not done. The drawdown is too high. The trade frequency is too low, and we have a specific target: passing a profit challenge. Episode 10, we add stop loss and take profit and ask Claude whether this strategy is actually prop firm ready. The answer will surprise you. See you on Sunday.